We've added a bit more, so now about 200-point up move on the Sensex, and the mid-cap index looks like perhaps could break into the green. But it's steel prices that are on our radar now. China's steel rebar prices have been declining. In fact, they've fallen almost 20% from their high in August. Manisha is here to tell us what's plaguing the space. Manisha.
Well, absolutely. You know, this is one metal which actually did see first half on a very strong side, but last couple of months, or 3 months to be exact, it has been constantly declining, and we have seen 3% of a cut come in for the steel rebar prices today itself. Not just steel, if you look at the other metals, you have seen an impact come in on that one as well. The nickel prices today in Shanghai fell by 0.5%. Zinc is down 2.5% as well. It really has to do with the increased production that we have seen in China and the demand concerns that we really seem to be looking at on ground right now. As we've been telling you, it is going to be most important, the G20 summit meeting by end of this week. That is when US and China will have those trade negotiations. The 10% tariff that we have seen come in on many metals and goods worth 250 billion worth of Chinese goods is expected to increase to 25% starting 1st January 2019. This is something that the markets really seem to be taking an impact of right now. But joining us to talk more about that is Amit Dixit from Edelweiss. Amit, hi. The metal prices haven't had such a great day today, and the major cues really seem to be coming in from the Shanghai metals. What has been your reading, and how much of a more bearishness are you expecting, and how important really is the G20 meeting? Are you keeping an eye on that?
Yeah, hi. So steel prices have been under a little bit of pressure in China, and the pressure has been mounting, particularly due to the concerns that we all know. Of course, macro indicators have been weak, and there are concerns around slowdown. So these are certain things that have been known, but especially during last week, if you see, and especially actually from October onwards, we have seen rebar prices coming in a bit of pressure. And HRC was always under pressure in China. So therefore, what has actually happened is that, first of all, the production cuts that people were anticipating would be much higher. I think so far we still have to read the commendable data on that, because it will in the spirit actually to start from November. So that is something that we have to keep an eye on. But the growth was always going to be a concern, which is a concern even now. But if you look at some of the ancillary indicators from China, I mean, I'm sure they are at least not that bad as Street is making out them to be. So if you look at, for example, the data on construction equipment, look at the data on your power equipment, look at data on cement sales. So everything is on an uptrend or has stabilized, except for auto and industrial engines, which have come down. So really, at this level, if you look in China, most of the producers, the non-integrated producers, are actually losing money. So what is more, I would say, important for me is to see the raw material price correction. Now, today, if you see, the Dalian Future Index has crashed almost 7%, which is really a sign of the worry. So for me, it's not about steel prices that much. It's about raw material prices, because once your raw material prices start correcting, then you are in an abyss kind of situation.
Mm-hmm. So the steel prices falling essentially becomes a byproduct of what's happening to underlying ore prices, essentially is what you're saying, Amit. And that's what's going on now.
Yeah, so what I'm saying is that, ore prices have just started correcting, and which is quite, well, that is something that one needs to keep an eye on, because otherwise steel prices always get a support, because you have, people who are not making money, so marginal producers don't get in. But the moment you have raw material prices correcting, so, everybody starts making money, and there is suddenly copious volumes coming in market. So this is something that we have to keep an eye on, really. So far, we have seen that profitability had declined, and there were in September. In fact, people were not making money in China. The non-integrated producers. That's what I said. So raw material prices is something that one must keep an eye on. So if you look at iron ore prices, for instance, they have corrected from $74 to approximately $68. Coking coal prices have also come under a little bit of kind of pressure as of now. So these are the things that one should monitor, rather than steel prices themselves in isolation.
Just a very elementary question. How much are rebar prices an indication as compared to, say, hot rolled or other products for where the steel cycle is at?
Well, rebar prices, rebar is like used in construction, but at the same time, if you look from an exports perspective, well, rebar really doesn't matter because not much of rebar is exported from China or anywhere else. So, but yeah, I mean, as far as the health of Chinese economy is concerned, definitely rebar is a very powerful indicator because of the construction focus of it. So, rebar prices correcting, that is definitely a sign of concern, according to me.
Okay, Amit, one more question actually, and stock specific on JSPL. I mean, compared to the other stocks, this one's taking a particularly bad hit, down now 6-7%. Anything besides just this steel price correction?
No, definitely not. And if you look at JSPL, I would say that from valuation perspective, the stock is quite attractive at this kind of valuation range. And this is the stock that we have been maintaining that you will see considerable operating leverage benefits from this stock because they are the only ones apart from SAIL who are ramping up production. That is point number one. Point number two, on the import threat, with JSPL and other long guys are relatively more protected because not many longs are imported in India. Flats are imported, yeah, but not longs. So I would say that the reaction on the stock, I would say that's a little bit overdone in my view at this stage.
Amit, I just have one final question, and this really is going back to the raw materials because most of the bank and the international brokerage reports that seem to be coming out are not very bullish on the raw materials for the next couple of quarters. How have you read it? Sitting in India, we are expecting demand to be positive here, but what impact do you see of this international opinion right now on the Indian markets really?
Yes, see, I mean, while you might argue that the demand in India is localized and we are seeing a good spurt in demand, at the end of the day, what happens is that it depends on Chinese export prices, which are unfortunately governed by how iron ore prices kind of go and how rebar price, how coking coal prices go. So I would see that the import parity actually goes down, and once that goes down, then you have no other option but to cut prices. So that is how it is interrelated. Though in Indian context, I would say iron ore prices don't really matter much to integrated producers such as SAIL and Tata Steel. But at the end of it, you're all kind of dictated by the Chinese export price, which is down. And it is currently prices in India are at 7 to 8% premium to the Chinese export prices, I would say. And that is a sign of worry.
All right, Amit, thanks very much. Appreciate you joining in. Manisha, thanks very much for taking us through and highlighting what's happening with the steel rebar prices. Appreciate both of you.